Sick of those fancy, expensive trading strategies? We've got something way simpler, a super easy strategy that works for everything: stocks, bonds, futures, forex, crypto, the whole shebang. Whether you're a trading pro or just starting out, this strategy is totally free and so easy. Even a monkey can do it. Let's get started. Head over to the trading view and pick a 15-minute Bitcoin chart. We're gonna add the super cool tool called the liquidity weighted super trend. It's like the regular super trend, but way smarter because it takes into account how much money is being traded, adding it as a piece of cake. Look for the indicator section at the top of the trading view. Click on it and a search bar will pop up. Type liquidity weighted super trend and hit enter. Okay, let's dive deeper into the awesome indicators called the liquidity weighted super trend. It's a super powerful tool for finding those sweet buy and sell signals. And the best part is you can find it right on TradingView. But here's the secret. We're gonna tweak some settings to make it even more awesome. So head over to the indicator settings window and find inputs tab. Think of this tab as the control panel for the indicator. First, let's change the super trend type to smoothed. This is like smoothing out the rough edges of the indicator, giving you cleaner and more reliable signals. Next, leave the factor at its default value of 1. This factor determines how sensitive the indicator is to price changes. A higher value makes it more sensitive, while a lower value makes it less sensitive. In this case, the default value works just fine. Now let's adjust the super trend length to 14. This number basically tells the indicator how far back in time to look for trends. A higher number means it looks further back, while a lower number means it focuses on more recent price movements. A length of 14 is a good balance for most markets. Finally, we'll adjust the fast MA length to 7 and a slow MA length to 45. These settings control the two moving averages that the indicator uses to calculate its signals. A short fast MA makes the indicator more responsive to short-term price changes, while a longer slow MA makes it more focused on long-term trends. These values provide a good mix of responsiveness and stability. Okay, now let's go to the style tab, and here we're gonna turn off the super trend and plots options. Make sure the down arrow is set to above bar and the up arrow is set to below bar. Also turn off the plots background option. And that's it. We've just customized this buy and sell indicator to give you even more accurate signals. Let's see how it works in action. Okay, let's break it down what these red and green arrows means. The red arrow pointing above the candles are short signals, telling you to sell. The green arrows pointing below the candles are long signals, telling you to buy. But I gotta be honest with you, this indicator, like many others, can sometimes give you signals that go against the overall market trend. It's like trying to swim against the current. But don't worry, there's a way to fix this. But before we get to that, make sure you hit that subscribe button. You won't want to miss the awesome trading tips and strategies we've got coming up. Okay, back to the strategy. Let's head back to the indicator section and add the one-sided Gaussian filter. It's a special kind of moving average that uses Fibonacci numbers, those magical numbers that nature seems to love. Now let's tweak some settings. Go to the indicator settings window and find the inputs tab. Leave the Heikingashi and source options as they are. These are the default settings and they usually work just fine. Next, change the Gaussian level depth to 100. This number controls how deep the indicator looks into the past to calculate its value. A higher number means it looks further back. Then change the extra smoothing to 14. The setting helps to smooth out the indicator signals, making them less noisy and more reliable. Finally, change the ATR period to 27. The setting determines how the indicator calculates volatility. One more thing, turn off the show signal option. We're not going to use this indicator for a signal directly. Instead, we're going to use it as a trend finder to help us interpret the signals from our main indicator. Last but not least, let's make some changes in the style tab. This is where we can customize the look of the indicator to make it easier to see on the chart. Okay, let's break down how to use the Gaussian filter indicator. When the Gaussian filter line is green and the price candles are above it, that means the market is trending upward. So we should be looking for buy signals, like the green arrow below the candle. Once we see the green arrow, we can enter a long trade at the close of the signal candle. Now let's talk about risk management. To set a stop loss, find the recent swing low and place your stop loss slightly below it. For the take profit, use a risk to reward ratio of 1 to 1.5. This means your take profit should be 1.5 times the distance of your entry price to your stop loss. The strategy is great at filtering out those pesky counter trend signals. For example, see this red arrow? That's a sell signal. But since we're in an uptrend, thanks to the Gaussian filter, we can ignore it. Here's another example. This buy signal is also filtered out because the Gaussian filter line is red and the candle is below it. And this sell signal is also filtered out because the Gaussian filter line is green. And this buy signal before that was also filtered out because the candle was below the line. And when the Gaussian filter line is red and the price candles are below it, basically it's telling you that the market is heading downhill. So we should be on the lookout for sell signals. The red arrow above the candle is a sell signal. It's like a traffic light saying, hey, it's time to sell. So when you see the red arrow, you can enter a short trade at the close price of the signal candle. And let's talk about risk management. To set a stop loss, find the recent swing high, that peak where the price turned around. Place your stop loss slightly above it. This helps protect your profit if the market suddenly reverses. And for the take profit, use a risk to reward ratio of 1 to 1.5. This means you'll aim to make 1.5 times the amount you could potentially lose. That's the basic strategy. Remember, always use proper risk management and keep an eye on the market to adjust your trades as needed.